find opportunities either in the London or the New York session, you're able to enter and exit your trade within that period.
So now, if I have done my research very well, I can stake $1 million at 11 a.m. 4 p.m. naambia watu wachome nyama.
Now, the last time our guest for this episode, Rufas Kamau, was on the show, we exclusively focused on Bitcoin. Leo, we are answering all questions in regards to Forex trading.
If I am right, I make 50K.
Yes.
If I am wrong, I lose 20K.
Yes.
So in a worst case scenario, I'll have 980,000.
Yes.
In a good scenario, I have 1,050,000.
Yes.
So how much time is this? What's the time limit of a trade?
Rufas Kamau is a market analyst for FX Pesa. Now, he refuses to believe that Forex is like betting. Forex ni kamari. Forex ni kama pata potea. Can he prove me wrong?
Let's say $1 million bob liquid, nichukue 200. Nataka hii 200. Leo nikiamka asubuhi nita tap tengeli on the computer. Baka jioni to make 10K.
Well, have you traded before?
A special shout out to the Bullish Banter podcast. Leo tumeboro your co-host Rufas Kamau. Let's see vile atawa represent.
The traditional Forex trader used to just trade Forex, but now, like on one platform, you can get there's assets, there's gold, and other commodities. There's oil, there's coffee, there's soybeans, wheat, all on one platform. It can be on your app, on your phone, can be on your laptop. You have shares.
And these are real assets?
Yes.
So if I buy gold on Forex, and then I say I don't want the money, I want the gold, where do I get it?
No, they are, we call them CFDs, contracts for difference.
I'm your host, Dr. Kingori, and here's another reason to stay subscribed to our channel. Kama hauja subscribe, this right here is a good time to hit subscribe and turn on the notifications bell. Alafu kiangalia set yetu, if you love the location, this is happening at Wojo, Africa. Iko Upper Hill, Makiwa Hotel, formerly Crown Plaza. If you are ever in need of an office space, fully furnished, if you're familiar with the concept, your co-working space, there's the details on how you can get in touch with the team at Wojo.
Uko sawa?
Kabisa.
Good vibes. If Forex has that much money. Nimekungoja sana. I've waited for you for months. Because the last debate tuli debate hapa mpaka time clocked us out. Right? If Forex has that much money, why are you still working? Well, see, you would have applied the formula, useme, I have enough now, wacha nitulie.
Thing is, nobody has solved the markets.
Nobody has solved markets?
Yeah.
What does that mean?
Nobody has like a one-time solution that nikona hii solution. And now with this strategy, well, once I get into the markets, I start just harvesting money from the markets.
Okay.
Yeah. So it's a business where you have to take risks and get rewards. And not all the time you're going to win.
You will start this conversation with you knocking yourself out.
Yeah.
That is basically randomness. Now your argument and our conversation we keep postponing for this conversation is Forex is purely randomness. Kuangukia ni kamari.
No, it's not randomness. Yeah. So I don't know how to explain it. Let's think about it this way. Consider a fisherman.
Fisherman, yes.
Yeah. Yes. You go into the ocean to fish. Sometimes you'll get fish, sometimes you'll not get fish. Is that based on randomness?
Sometimes you get fish, sometimes you don't get fish.
Yeah.
In this case, it is because sometimes you get fish, sometimes you may not get.
Yeah.
You cannot predict. Sometimes you may get fish for a week.
Yeah.
Sometimes you may not get fish for the whole week.
Yeah.
Right?
Yeah.
Nothing explains randomness.
Well, that. Now consider a very experienced fisherman. He has studied the waves of the ocean, the fish migration cycles, how fish move around the ocean, and every time he goes to fish, he almost certainly comes out with something.
Almost certainly.
Yeah.
So we are not talking about certainty.
Yeah, but considered to the inexperienced fisherman, this guy has studied the fish patterns, so he's able to know that at this period of the year, fish are most likely to be found in this area. So when fish move to this other area, he moves to that area and keeps fishing there. So you'll find that this guy is almost usually successful compared to the non-experienced fisherman.
Okay, so compared.
Yes. So the point I'm trying to bring about is that every aspect of life, business has some element of randomness. Like, yes.
You agree with me?
Everything you do has some element of randomness.
Yes.
So the idea is that when you're looking at Forex, there are predictable patterns that happen every now and then. So it's based on real world data when you're doing your analysis, trying to formulate a strategy in order to find an edge when you are trading. So case in point, let me give you an example with central banks. So central banks have a mandate and it's in law. Any central bank around the world, they have a mandate. This is what you are supposed to do. So in most cases, the mandate is to stabilize currencies or to stabilize prices within the economy. So if the currency is losing too much, they will try to strengthen it. If it's gaining too much, they will try to weaken it to maintain some level of stability. You remember when...
in layman's language,
yeah.
What you're saying is, if the Kenyan shilling is gaining too much against the dollar,
yeah,
like let's say we are now at 129,
yeah,
it was to gain too much, like at the shilling was to trade at 80 shillings to the dollar,
yes,
that's a concern.
Yes, that's a big problem for Kenya.
We want good news, but we don't want extreme good news. That's what you're saying?
Yes, if our currency strengthens too much, we are some of the top exporters of quality tea, quality coffee. So for the guys who are buying coffee from Kenya, let's say tea from Kenya, every time they come with $1, they are getting 129 shillings. Then a month later, you're telling them that they are no longer getting 129, now they are getting 80 bob. So in that case, they will not be able to afford our coffee. So it will drive our economy downwards.
Then why do we, okay, when we say dollar iko juu, we are complaining that the dollar rates are high.
Yeah.
We just want them to go down kidogo, but not go down. Like it's not something to celebrate. If the Kenyan shillings was equal to the dollar, it's not something to celebrate.
Well, if it's in a gradual long-term process.
Long-term?
Yes, where it's bit by bit, like prices are not too unstable. Think about it this way. Let's say you are a foreigner and you are employed in Kenya. Okay?
Yes.
You get paid a certain salary where if you convert 129 shillings, you get $1. Now, you maintain the same salary, but now for 80 shillings, you'll be getting $1, right? That means that you are earning more, right? Because every time you are buying the dollar, now it costs you less money. So you'll find that there's more foreigners coming to work in Kenya.
Okay.
Like it would make a lot more sense for the average worker, let's say, who earns the same salary compared, let's say, to our neighbors. Let's say you are a driver in Tanzania, you are a driver in Uganda, Rwanda, and then you realize that, wait, you can get the same salary in Kenya, but it would be a much higher value.
Sitaki kupotea.
Yeah.
Assuming $1,
yeah,
1 Kenyan shilling goes, like in a utopia scenario, 1 Kenyan shillings is equal to $1.
Yeah.
It means the purchasing power of 1 Kenyan shilling will be equal to what the dollar. It's not about the quantity in terms of like I have 129. What I buy for 129 is what I'll buy with $1. But if the shilling is strong enough to purchase as itself without a company of a group of 128 others, it's still the same.
So all kinds of things happen. Have you seen how like Europe is really struggling with immigration? Like guys are dying on boats just to land on Europe.
Yes.
The main reason this is happening is because their currency is very strong. It's very strong, way stronger than the dollar and many other currencies. That is in terms of valuation.
Okay.
So this means even if you get a very manual job, whether you are a driver, whatever job you get out there, money that would have taken you 10 years to save in Kenya, in Nigeria, in Tunisia, now you can save it in 1 year. So you find all these guys flow to their country. And the end result, if you're an employer in Europe, what do? You go for the cheap labor and the locals don't have jobs.
Yes. Now so far tuko pamoja.
Yeah.
But also this the locals don't have jobs.
Yeah.
But it is pegged on the fact that a Kenyan who tries so much to go to Europe to get paid in euros or in dollars, it's because they want to come back to Kenya and convert it to Kenyan shillings because the value they would get in terms of Kenyan shillings is higher than what they would get buying in Europe for the same amount in dollars.
Yes. So you find that that's usually the dream. I'm doing my math, let's say between now and 5 years from now, the amount I'm projecting to save or invest compared to if I was working in a foreign jurisdiction, let's say in Europe, the US, I can see that I can make the same amount within a period of 1 year. So this leads to a migration. So you find that people will move to those jurisdictions where they value the currency and they view the income as much higher. But then once they move to those countries, and it's usually the most competitive people in the population who will move fast. So once they get out there, they fall into this trap. So once you've worked in the US or the UK for 5 years, you've already integrated in their culture, right? So the idea that I'm gonna work for 2-3 years and then come back is usually a lie. It doesn't happen.
Okay.
Yeah. Most people will work their entire lifetimes before coming back.
Why is that? Because you're chasing a mirage?
Yes, like the moment you move there, you start making some money. What were your immediate needs in Kenya? Maybe you needed to get a house, you needed to get some land, some savings. By the time you get all those needs that you had in your mind, let's say 3, 4, 5 years down the line, you've already integrated into their culture. So what do? You start bringing in your wife, you start bringing in your kids, your brother, your sister, and in 1 or 2 decades, your entire family is out there. Yeah.
So you replicated the situation huko.
Yeah.
But then now tuli digress pale kwa randomness, okay?
Yes.
Na maybe tulienda mbele kwanza.
Yeah.
What is forex trading?
Forex trading is basically speculating on currencies.
Okay.
Yeah. In a traditional sense, people would literally just get into a trading platform. You would buy, let's say, the euro compared to the dollar.
Yes.
You'd buy the pound compared to the dollar. You'd sell the yen compared to the dollar and so on. So all these trades, you are trying to speculate on which currency is going to strengthen against which other currency. And this is quite predictable, especially when you understand how central banks function. Case in point, over the last, I would say 10 years, we have had this scenario where the Bank of Japan was printing out of currency and their interest rates were at negative 0.1%, which means that the Bank of Japan was discouraging people from saving money in the banks. You see, like how in Kenya, the interest rates from the central bank, previously we even had 13.5% last year.
Yes.
During that period, the banks, the SACCOs were competing to offer yield to people who save in fixed deposit. Because if you save in fixed deposit, the bank is able to take this money, invest in a treasury bond, they get 16% and then they give you a share of that. So at the end of the year, your fixed savings would have a return. So now imagine if the central bank was to lower the interest rates all the way down to negative 0.1%. So in that case, the bank wouldn't be discouraging you to deposit money with them because they don't want to hold on to money when the interest rates are negative. So during that period, we saw positive interest rates in the US, in the Western economies. So in that case, it created a flow of currency where you would go to Japan, like there is excess money in the banks. The banks don't want to sit on cash. They always want to lend it out. Either they lend it out to the government or to the business and individuals, whoever is offering the highest rates at the lowest risk.
Whoever is offering the highest risk at the lowest risk.
At the lowest risk.
Okay.
Yeah. So banks in Japan would easily lend out of cash. So out of investors and individuals, hedge funds would literally borrow money from Japan and invest in US equities.
Okay.
So you can imagine I borrow money from Japan, but I don't take the Japanese yen to the US. I convert that to dollars. So I leave the money there. And then I go buy US treasuries. So in that case, there was excess currency in Japan and scarcity in US dollars. So as a result, what we saw was the dollar continuing to gain against the yen. The trend drove the currency to around 150 against the dollar. And that was a decades high. So whenever you see such divergences with central banks, that's useful information to a Forex trader. In that, there is a predictable pattern in terms of investor behavior that you can use when you are trading.
So twende wewe as a Kenyan.
Yes.
You have the information of this what is happening there.
Yeah.
So are you trading on the yen, or are you looking for a strategy to borrow in the yen and use that to invest in the US T-bills, for example?
Yeah.
But how do you qualify, if this is the case, how do you qualify to borrow money from a bank in Japan?
Yes. So I'm talking about at institutional level.
Or this is hakuna cha individuals?
Yes, mimi.
So ni banks playing at... okay.
That's the game that is played by the banks, the hedge funds, like literally the big financial institutions.
That's where the low risk comes in?
Yes.
Okay.
So when it comes to a Kenyan, what you do, let's say you go to FX Pesa, you open a trading account, and then you have your 300-400K, you deposit into that account. So that money is automatically converted into dollars and credited to your account. So you have these stickers basically showing you the exchange rates. The same exchange rates you would see at a Forex bureau or at a bank, showing you USD JPY is trading at this, pound yen is trading at this, and so on. So for you, you will do your analysis and realize what's happening with the guys who are moving the markets. Because retail traders basically make about 2% of the total volume in the market.
Market movers?
Yeah.
Kuna market movers?
Yes.
Okay.
It's not like they collectively decided let's move the market to this direction.
But the
it's more like the volume of transactions from the big players is way bigger compared to retail.
So our watu wa Instagram, the Forex traders we know, cannot even do 3%.
I'm talking about all retail traders across the world.
All retail traders?
Yeah. They account for about 2% of the total volume traded in the market.
Retail traders, 2%?
Yeah. Think about it this way. There's investment banks that run volumes. Let's say they are running a pension scheme. There's let's say the Norwegian Sovereign Wealth Fund. There's big banks like HSBC, Citibank, Goldman Sachs. These guys have like real volumes where they have active trading desks and everything.
Billions of dollars.
Yes, they trade billions of dollars. So then there is the commercial banks. Commercial banks include our banks, Equity, KCB, and all commercial banks around the world. So these guys, the commercial banks, they all have their trading desks, and also they have clients, and they facilitate cross-border transactions. So at any given time, there is a person who walks, let's say, into KCB. They want to send some money to Japan. Let's say they are buying some cars or some parts and so on. So they will have to do foreign exchange transaction. They deposit Kenya shillings. Of course, the bank will enter the Forex market, find the right rate, and then convert for you. So if you go to a commercial bank, they'll give you a quote. So for Japanese yen, we are selling at this price. If you're okay, you complete the transaction. But KCB doesn't have all global currencies stored within the Kenyan banks. So they use the Forex market to get you a buyer or a seller depending on what side of the margin. Of course,
proper margin.
Yes, they're in business too, so they still have to add some spread for them to make a profit on their Forex department. So now expand these to commercial banks all over the world. All of them handling clients. Think about corporations that run cross-border business. Like I would say Apple selling iPhones all over the world. At some point, they have to report profits and they have to repatriate all those profits back to their country. Like a case in point, we had some investment banks who had invested in the Nairobi Securities Exchange, And whenever big companies like Safaricom would pay dividends, they would scoop up dollars in the market and there would be a short-term scarcity because they need to repatriate their profits back home. Yeah. So all this kind of business happens in one liquid market called the Forex market. Then there is myself with a $1,000 account, and I'm just speculating on the volume of trade and the direction it will take. Yeah. So out of all these, we know that central banks also have a mandate to provide liquidity in the markets. So whenever there is scarcity of Kenya shillings, the central bank will make sure there is enough. Whenever there is scarcity of dollar, the central bank will ensure there is enough dollars in the markets.
Okay.
Yeah. So as Forex traders, we are majorly following central banks, trying to understand what kind of policy they are implementing. So if there's a difference in the policy the Central Bank of Kenya is doing compared to, let's say, the Federal Reserve Bank of the US, then that causes a movement in the exchange. And that way you can take advantage of that. So as you can see, it's from structured data that we get to analyze and identify trading opportunities. So you're not just gambling or doing something out of randomness. There is a structure that is underneath the movement of currencies.
Studying patterns of what has happened in the past.
Yes.
But I subscribe to the idea that it is not possible to use the past to try and predict the future. There's no guarantee that we can't talk of guarantees. You can't say like, because things happened this way, they are likely to happen the same way in future. You can have a series of good luck. You can have a series of bad luck that can wipe you out.
Yeah. Well, this entire planet operates based on trends. Everything has some form of trend. And the past can always be used to predict the future.
The most convincing research I've seen, which I'm inclined to believe, which was the cause of my debate in a way, was that if you look at if you study the trend of survival of Forex traders, like daily traders, in 10 years, the survival rate is in the single digits in percentage.
Yes, it is. I 100% agree. So I've been training a lot of traders in Kenya, and the training is almost always the same. The basics that you need to understand is how is price formed. If it's, let's say, the exchange rate between the euro and the dollar, who decides this is the exchange rate? So you teach them about price discovery, you teach them about charts, how to read and analyze charts, technical analysis, fundamental analysis, market psychology, risk management, the same basic things that every other trader around the world is using.
Yes.
So once they learn all that, they will go and implement the same, but somehow someone ends up losing money. The main reason that this happens, even when you have a trading plan, is that most people, and not just Kenya, most people around the world are not very disciplined. And I would say that there are people who are physically capable in Kenya of beating Kipchoge, but they don't have his discipline. They don't have his discipline. If you look at the DNA, like the DNA of Kipchoge and his community, they are almost entirely the same, right? Why aren't we having like guys being second, third, fourth, fifth to Kipchoge? So it's the discipline that makes the difference. So while you may equip everyone with a skill, the difference in Forex trading is that the rules that you set in your trading, the strategy, the risk management, everything are self-imposed. And when you break them, there's nobody to come and beat you. It's your own rules, it's your own account, it's your own money. So most people are not able to maintain that discipline for a long period of time.
Okay.
Yeah. So eventually, either they get greedy or they become fearful or somehow they end up messing things up. So that's where you find that there's very few people that are very successful in Forex trading.
Okay.
Yeah.
Now, we've had a conversation on the the average return on investment. Shout out to Stormzy Mwendwa. He was on the show. Akasema in the stock market, the average return from 1900, the average return on investment has been 10%.
Yes.
Let me give you a scenario of a disciplined trader who has a seed capital of 100,000 shillings.
Yes.
100K, right?
Yeah.
Do these rules of return on investment apply when it comes to returns to Forex trading for a disciplined trader?
No, they do not apply.
Please explain.
If you look at the SP 500 returns over the last 50 years, the average return is 10%.
Yes.
So this 10% doesn't mean that you are guaranteed to get 10% every year. There are some times when the SP 500 will print negative returns in a year. We saw it happening in 2021. We saw it happening in 2007, 2008, and very many other years in between. So there are some good stellar years when it will return 19%, 20, 30%, and some other years it will be at 0, 4%, some other years 9%. So when he says the average return is 10%, it's an average of those ups and downs.
Over a period of time.
Yes.
Okay.
So that's a standard market. Remember, it's a bet on the US economy. When you talk about SP 500, you are betting on the US economy.
Okay.
You're basically taking, I would say, a pool. Think of a basket where you combine the stocks of the 500 best companies in the US. Where now in this basket, everyone contributes money into this basket. So when you're buying shares of the SP 500 ETF, you're just putting money in the basket. And then this money is being allocated to these shares. So when the money makes profit, your share in the basket is allocated a profit. Yeah.
Okay.
So in that case, if the US economy is moving up and down throughout a 50-year period and the average return is 10%, that is considered like the benchmark. So anyone who performs above 10% is said to have beaten the market, or below that, the SP 500, they are underperforming the market. So in Forex trading, it's a bit different because it's not, there's no pool or group. It's just you, yourself, and the markets. And every action you take in the markets, it's your responsibility. If you take the wrong trade, you're the one who is going to pay for the wrong trade. If you take the right trade and you make a profit, you benefit from your right decisions. So it's being successful in Forex trading is more internal than external.
Okay.
Yeah.
More internal than external.
Yes.
Give us. Yes. There's no fixed returns. There's no fixed returns. Okay.
Yes.
Let's assume someone's watching and they're interested and you teach that. Tunaweza wekea namba yako hapa?
Yes.
On how to reach you?
Yes, please.
We can make sure to make a number ya Rufas exactly at this point so that people when you wanataka to reach out to him and the team at FX Pesa wanaweza reach out.
Yeah.
Someone who wants to invest, like someone wants to start a career in trading.
Yeah.
Okay.
Yeah.
They have a seed capital. Let's say 100K.
Yeah.
Give us in your skills za kupredict how someone works.
Yeah.
With 100,000 shillings.
Yeah.
How do you play with this in terms of returns?
Yeah.
And with discipline, how does this look like at the end of the year if you follow rules?
Well, if you follow rules, there's also another aspect of your trading strategy. Your trading strategy determines how aggressive you are, or let's say whether you are a risk taker, you are risk averse. So there is a person who will use the 100,000 to take different trades on different days of the week, different days of the month, and so on. So you are more of a fisherman. So you are looking for the right opportunity, more of a sniper. You take the opportunity, you get some money, you get out. Sometimes you'll jump in, it's too hot in there, you get out with a small loss. So there are trades that you're going to win, there are trades you're going to lose. So if you're
and there is a possibility that you may lose everything.
Yes, there's also that possibility. So that's why you really need to invest in learning fast, especially to understand the risk management tools, so you don't just risk everything at once.
What are risk management tools?
So we have risk management tools such as position size calculators,
stop
loss. We have trading stops and so on.
Trading stops.
Trailing
stops.
Yes.
So it means that this is
Think about it this way. Let's say you are trading You are trading gold today, and
it's not just currency.
Yeah, we have like so many assets. The traditional forex trader used to just trade forex, but now like on one platform you can get there's assets, there's gold, and other commodities. There's oil, there's coffee, there's soya beans, wheat, all on one platform. It can be on your app, on your phone, can be on your laptop. You have shares,
and these are real assets.
Yes.
So if I buy gold on forex, and then I say I don't want the money, I want the gold. Where do I get it?
No. They are. We call them CFDs, contracts for difference. So you're getting into a contract, but you're not getting delivery. So even when you're
so it is your money you're imagining in the computer.
No. Think about it this way. When you say a contract for difference,
yes,
it's an agreement between you and the broker that this contract shall mirror the value of the real asset.
But this asset is not anywhere?
No, it's not there. When you buy oil on the forex market, you're not going to get oil delivered to your doorstep. That's not going to happen.
And it's not...
So it's a contract. Remember, you're in the speculative business.
So it is just subjective reality. It's not...
No, it's very real. Contracts for difference are very real. They work like this. Let's use this book. Okay?
Mm-hmm. Yes.
Let's say we say these are contracts. Yes. And this contract shall be equivalent to the value of 1 barrel of oil. Okay?
Yes.
Let's say right now, 1 barrel of oil is going for $79.
Yes.
So I'll be able to buy this contract from you at $79.
Okay? Yes.
So whatever price the contract goes, let's say it goes up or it goes down, if I decide to sell the contract back to you, let's say the price is $80. You'll pay me $80 and I make $1 profit. Okay. If I decide to sell it at, let's say, $77, then I will have made a $2 loss. So assuming you are the broker and I'm the trader, you don't have to take the risk yourself. There is a very liquid derivatives market that is very connected globally, and it's very liquid, meaning that it has a lot of billions of dollars in it. Okay. So what the broker does, they connect you to that liquid market.
I asked someone.
Yeah. So whenever I'm buying a CFD, the broker just connects you to the market. Another person matches your order, and the opposite trade is also true. Whenever I'm selling, they connect me with the buyer. They take a small portion of that transaction, either a spread or a commission.
Now that you mentioned liquidity, before we come back to here, I asked someone, a trading platform. There was talk at your Bitcoin was, let me read it for Bitcoin for the sake of this example. Bitcoin in 2016 was 60,000 Kenyan shillings.
Yes.
Let's assume you're a risk taker. You have some 600K to play with. And then you buy 10 Bitcoins for 600K in 2016. Juicy, it went, let's assume Juicy, it hits 10 million shillings for 1 Bitcoin. So you invested
600K.
600K, but now you have, this is like 10
times 6.
Yes. Like this is
6 million. 60 million,
60 million, right?
60
million Kenya shillings.
Yes.
I have 10 Bitcoins.
Yes.
I have 10 Bitcoins.
Yes.
Right?
Yeah.
I have them.
Yeah.
In whatever place I have stored them.
Yes.
Liquidating this is instant as possible. Like I can get that 60 million in my account immediately.
Yes.
Like real time. Hakuna cha sijui we discussing let's look for buyers ni nini. It is real time.
The top crypto platforms are running billions worth of liquidity in Bitcoin. So if you go to a platform like crypto.com, there's Coinbase, there's Binance, Kraken, all of them are running like huge volumes. So if you decide to sell your Bitcoin, you just deposit to their platforms, and then you convert to, let's say, USDT, or you decide to withdraw in cash, you send it right to your bank.
So this is the same applies. The same applies to oil. For example, if you're trading oil or you're trading gold, you build an asset base, digital asset base of at $1 billion shillings. If I want to liquidate, I can liquidate immediately.
Yes, it's the most liquid market in the world, the Forex market. There's no other market that is more liquid than the Forex market.
Okay.
Yeah.
Turudi hapa kwa nini? I'm very curious about the trading.
Yeah.
Like, is it something is this something you would advise someone to take as a career? People always talk about, we have money and we don't know where to put it. I have, let's say, I have like $1 million bob to play with.
Yeah.
Right?
Yeah.
Nimekuja kwako.
Yeah.
For purposes of this conversation.
Yeah.
How would you guide me from step one? Like, let's say, I want to be a trader because I want to nataka watu wa Instagram wanitambue with my $1 million.
Well, I would say this. If you have some money and you don't know where to put it, then perhaps look for a place where you do an investment. There's a difference between investing and trading.
There's a difference between investing and trading?
Yes.
The overall goal is not to make money?
Well, the overall goal is to make money, but there are differences in like the way you make money.
What's the difference between investment and trading?
In trading, it's a full-time job. It's active. I would say active job, meaning that it requires your input a lot in terms of daily research, trying to understand market trends. What did Trump say last night? Because it may have moved the markets. What are central banks doing? What are the key economic data being released around the world? What are the current trends on the charts? You do your analysis to find opportunities. So trading is like a very engaging job.
It's a very engaging.
I would say it's a contact sport. It's a very physical sport.
Sawa.
But then, when you look at investing comes in very many ways. So for most people, they don't even realize they're investing. You'll just see someone saying, nimenunua kaploti hapo nyumbani, nimejenga kidogo, kwanza nitakodisha before eventually nitahamia huko. But it's an investment, right?
Yes.
Mwingine atasema nimeweka kauba hapa. Like, those are investments. Yes. So when we talk about investing, there are different goals. It varies from person to person, but we can classify them as growth. For a young person, you're looking to grow capital. If, let's say, you're in your 20s, you have some surplus income, you want that capital to be somewhere where it's growing. So some people will go for some circles, money market funds, bonds. Others will go for Bitcoin, foreign stocks, indices, ETFs, and so on. So there are people who are looking for growth. I have this surplus amount of money. I want to put it somewhere where it can grow over time. Okay? There are people who will be investing for retirement. I know I have, let's say, 10, 15, 20 years before I retire. By the time I retire, I will no longer have an income. And maybe the NSSF I'm expecting is not sufficient to meet my needs. So I'll need an extra income, and I won't be physically like strong to continue doing my job. So what you do, you look for an investment that will either give you cash flow or maybe a lump sum or some form of growth. So some investors, for instance, in the US, a lot of people will put money in dividend yielding stocks, where you keep building a position. Let's say you're buying into an ETF that has some good dividends. So you build a position. You might start with $1,000 today, but in 10, 20 years, you already have, let's say, 2 million, 3 million, 5 million. And by the time you get to that retirement, you don't just withdraw the money. The position is such huge that the dividends you get from that investment is enough to run your life. Yeah. Okay. So investment also is not short term, it's a long term. So it tends to span above 1 year. If you look at bonds versus treasury notes, bonds tend to take longer. You notice that they are 10-year plus. So investments tend to be longer term in terms of horizon, but trades can be very short term. You can take a trade and close it within a couple of seconds, a couple of minutes, or even a couple of hours. So for traders, they're trying to take advantage of volatility in the markets. So by taking advantage of volatility, you're looking at the daily movements, understanding these are the repeating patterns that tend to repeat over time, and take advantage over that. Okay. So while some people argue it doesn't have a net benefit, it actually has a net benefit. So when you go to a local bank and you want to send $1,000 to South Africa, maybe you are paying for a subscription, then that rate between Kenya shilling and South African rand might be met by a Forex trader who is trading here in Kenya. Yeah.
Okay.
Yeah.
Okay. So, there's a something on the show.
Yeah.
Tunataka kuibust kabisa, but we are struggling to bust it.
Yeah.
We've called it the Engineer Kimori Challenge.
Yeah. Yeah.
I'll put it to you, but
Yeah.
before I put it to you,
Yeah.
Please judge my strategy.
Yeah.
I have $1 million bob.
Yes.
Nimekuja nimesoma trading.
Yeah.
So I'm saying, like, there's nothing else I want to do. Like,
Yeah. Yeah.
this is sasa I'm cooking my retirement.
Yeah.
Kwa hii $1 million bob,
Yeah.
I remove 200,000 naingia nayo soko.
Yeah.
Trading.
Yeah.
Forex.
Yeah.
I want this 200K
Yeah.
to make me
Yeah.
10K
Yeah.
in a day.
Yeah.
Right?
Yeah.
I may nicheze nayo.
Yeah.
Niseme, yes, 10K. I believe it can.
Yeah.
Ni study market, ni find
Yeah.
10K.
Yeah.
Can I leave, can I say, is that a lifestyle I can assume? Like, if I'm, like, let's say $1 million bob liquid, nichukue 200,
Yeah.
nataka hii 200, leo nikiamka asubuhi, nita tap tengeli on the computer,
Yeah.
baka jioni,
Yeah.
to make 10K.
Well, have you traded before?
No, sasa I am green, but sasa this is a strategy I've come up with.
Yes.
Yeah.
So the thing is, anyone, even my grandpa right now, can click a button to buy any asset in the Forex market, either it's Euro USD or even to sell, and they would have a 50-50% chance of winning.
Yes.
And they could win and I lose, right? Even after I've done all my research, they could just click a button, I win, and I lose. So the outcome of one individual trade won't basically be reliable over a long period of time without a proper structure. So when you mentioned randomness, yes, it's also possible for people to gamble in the markets. Like if you don't know what you're doing and you just come and place a trade, then you're literally gambling. It's more like, think of all the SP500 companies in the US. If you put them on a chart and you just throw a dart and it lands on one of the stocks and you decide I'm buying this one and price goes up, then you are literally gambling, okay? Because there's no structure. You haven't even studied the underlying performance of the company, their earnings, their capital structure, whether they are indebted. You need to at least understand the financial position of the company before you invest in it. Okay. So it's the same thing in trading. So just like any other career, if you want to be a lawyer, you would have to go do a whole degree, go to Kenya School of Law, qualify for the bar so that you start practicing. So in order for you to reap rewards in Forex trading, you still have to invest in education. So the only difference between Forex trading and other careers is that you will not learn Forex trading in school. There's no colleges offering that. But then in these other career paths, you're able to go through school, through professional institutions and such. Also, due to the dynamic world of Forex trading and the pursuit of removing traditional barriers, there has been so much innovation, a lot of education platforms, a lot of information to allow you free access. So in that case, it has shortened the journey. So for someone who would study Forex trading, let's say back in the 2000s, there were no YouTube courses, there were no online courses, there were no podcasts. So they would generally have to buy books, go to an expensive broker. They would face a lot of hurdles. They would have to send their money offshore in order to get an account and start trading. So it would be really difficult for this person to eventually get the skill and start trading. So today, all those barriers have been removed. You can deposit via M-Pesa, you can withdraw via M-Pesa, you can learn online. There's a demo account for practicing. So before you even make your first mistake, you can have a demo account, like paper money that you practice with in the markets. So it mirrors the trading you do on a live account in that you can see the real market prices. You can execute a trade, see how it impacts you. So as you learn, you're able to practice these ideas. So once you learn, then you can engage into a live trading account. And when I say live trading account, if you have your melee and you don't just learn, get from the demo and then decide I'm putting this 100,000 in the market now I know how to trade. No, you can even start very small and then grow progressively. You can even start with, let's say, 13 Gs. That would be about 100K. $100. Trade that account with very small lot sizes. So in that case, you'll be making $1, $5, $10. In case you are losing, let's say you limit your losses to $5. So you keep trading on that account and then test whether you have actually learned the skill. But in this case, you're not testing it with $1 million bob, you're testing it with 13,000 shillings. So you keep practicing and learning as you trade that account. So the more you grow in terms of skill and confidence, you'll get to a level where you now independently decide that now I think I'm a good Forex trader. Let's now move to $1,000 or 100,000 shillings.
Okay.
You start now with your 100,000 shillings. Okay. So if you are saying you want to do that today, consider that to be 3 months from now, after you have been learning and learning and learning.
Okay.
So you see, we have moved you from depositing your money today to 3 months from now, but by first investing in education. And then 3 months from now, you are trading the $100. You're not trading the full amount.
Okay.
So in another few months, you're just practicing on small accounts until you are very confident of your skill. So another 3 months, so now you're down 6 months. At this point, you're able to trade a $1,000 account without blowing it.
Okay.
So another 6 months, you have been trading the $1,000 account. Now you are fully confident and you're making profits. Let's say at a certain proportion. Let's say in a given month you are up 10%, 20%. And then now you start thinking, wait, if I'm making 20% on 100K, what if I'm trading $1 million? Now you start looking for capital to add onto your account because now you have the skill and you're able to extract money from the markets.
Okay.
Yeah.
How long have you traded?
Well, the first instance I traded was in 2013.
2013.
Yes.
So that's possibly 15 years?
This is my 12th year.
Yeah, okay.
Yeah.
So 12th year.
Yeah.
Do you still lose money in Forex?
Well, sometimes I get it wrong and I lose money.
And you still say that after 3 months, someone is confident enough to deposit money?
Well, when I say I still lose money, I'm not saying that I'll deposit $1 million and then blow it. It's more like sometimes I'll take a trade today and it's successful. Tomorrow I take another trade, it's not successful.
What does that look like? Like if you take $1 million and you put a trade today.
Yes.
And it is successful. What does that look like? What does that mean?
So think of it of a segmented trade. So when you deposit money in a trading account, you don't like just risk everything in one trade. That would be like bad approach. So you'll take a proportion of your capital and decide, I'm risking 2% today on this trade. So if I'm right, I'm targeting to make 4 or 5%.
On that day?
Yeah, on that trade.
Of that amount?
Yes.
So let's assume you have staked $1 million.
Yes.
And you have staked it on a trade on that day.
Yeah.
If you win, you make 5%.
Yes.
Which means this is like 50K.
Yes.
On that day.
Yeah.
If you put $1 million on that day,
yeah,
and the trade works,
yes,
you make 50K.
Yes.
Right?
Yes.
So.
And if you are wrong, you lose 20K.
If you're wrong, you lose.
Yeah.
This is a sweet deal, Goja.
Yeah.
So if I am right, I make 50K.
Yes.
If I am wrong, I lose 20K.
Yes.
So in a worst case scenario, I'll have 980,000.
Yes.
In a good scenario, I have 1,050,000.
Yes.
So how much time is this? What's the time limit of a trade? Once I stake, how much time before I know Kama I've made 50K?
So in most cases, this takes like a session. A session is a period between when a particular stock market is open and when they close. So you'll find some Kenyan traders will do the London session because it's so comfortable. So from 11 a.m. all the way to 6 p.m., you're able to trade that volatility, the movement of markets between that period. So if you're a New York session trader, you start around 5:30 p.m. to 11 p.m. So if you find opportunities either in the London or the New York session, you're able to enter and exit your trade within that period.
So now, if I have done my research very well, I can stake $1 million at 11 a.m. 4 p.m. naambia watu wachome nyama.
Yes. Yes.
If I do my research.
Yeah, but if that $1 million is your entire capital, that would be a really bad approach. Because
I have $1 million. There is nothing else I'm doing.
Yeah.
There is nothing else I'm doing.
Yeah.
Worst case scenario, nitapoteza 20K. Good case scenario, I'll make 50K that day.
Absolutely.
And,
Absolutely.
And in
now,
terms of trends,
yeah.
if I am lucky,
yeah.
I can earn 50K per day nikicheza smart.
Yes, absolutely.
By just playing profit.
Yes.
50K daily.
Yeah. So what normally happens, if let's say you are trading in a given month, you have 5 days in a week, weekends the markets are closed. So let's say you have 21 days in a month where you're able to trade. So out of these 21 days, there are some days when you might enter the trade and lose 20K, and some other days you might enter and make 50K. So you will have those win, lose, win, win, lose, win, lose, win, win, lose, 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 win, win, and so on. So for Forex trading, when we talk about strategy and optimizing your trades, you're trying to look for the most likely trade that will win you money. So traders are constantly searching for these opportunities. And that's why we started this session. I talked about a fisherman, person who is looking for opportunities in the markets, because there is so many assets available for trading.
Okay.
So if you are really good at trading and you identify these opportunities consistently, so your net balance at the end of the month will be a positive.
Or your net benefit at the end of the month.
Yes.
So now here's where I place to you, I put to you, the Engineer Kimori challenge.
Yes.
Engineer Kimori said that, he said it on this show, that in Kenya, with a capital of 2 million shillings, it's impossible to make a net profit of 50,000 per month.
Well, I would argue against him 100%.
What is your submission?
We have a lot of traders that I've been working with, and they easily make that money. Some of them are making it what? You said 50,000 out of 2 million?
Yes.
Some guys are making 10-20% within a week.
Consistently?
Well, not very consistent. Yes.
So we are talking hata wachana na a week, a month, consistently.
Yes. So consistently, you will find that traders who have like really matured over the years in the markets, they tend to become more risk averse, because they know if the cost of losing a lot of money takes them like a few weeks, months back. So they tend to be very risk averse. So instead of risking 2%, they'll be risking 1%, even 0.5%. So they start moving backwards. It's only the new traders who will be risking 5-10% in their trades. So when these guys track back, they're able to find capital and then make sure that, you see, like when you have a big amount of capital, a small percentage is meaningful to you.
Yes, yes.
Like a young trader who is, let's say, in a university, and they're trading from, let's say, 100,000 shillings, if they make 20% in a month or in a week, this guy has 20K, right? But then a guy with $1 million makes the same 20%, they're making what? 200K.
Yes.
Now think of a guy with 10 million.
2 million.
They're making 2 million. So instead of that, you'll find a guy with 10 million, but they're not looking for 2 million. They are looking for 200, 300K. So they take a very small risk just to get that 200, 300K and then work to make it consistent.
Okay.
Yeah.
Okay. So,
So the same case you said, if you have 100, let's say 1 million, you decide to risk 20K and then you make 50K, you'll find as a trader grows older and they keep building their capital, they'll be more like, why don't I just risk 10K and I make 25K? Because if he takes a hit, he goes to 990 instead of 980. So they are more of capital protective than being aggressive.
Na huyu nani huyu roho safi hivi, when he loses, they give you 50K, but when you lose, they're only just taking 20K from you.
Well, so it's not someone who decides whether that happens. It's you as a trader who decides to look for such opportunities.
Not all opportunities are like that. There are opportunities that will wipe you out the 1 million.
No, it's more like there are opportunities where it's more likely to make 3 times the investment, sometimes 2 times the investment, sometimes 1 times the investment when you go for such a trade. So think about what? Safaricom shares. There was this period where they dropped from 46 all the way down to, let's say, was it $12? So you can decide to buy
$12 or 12 shillings.
12 shillings, sorry. You can decide to buy those shares at 12 shillings. But then in Forex, you're able to trade with leverage. So with leverage, you can borrow some cash, combine with your cash to buy Safaricom shares. So let's say you go 10x. 10x means that you're taking a 10 times bigger position. So if you buy, let's say 1,000 shares of Safaricom with 10x leverage, it means that if the price goes up by 1%, for you, you are gaining by 10%. And that's the power in FX. You're able to leverage higher. So in that case, if the share, let's say, gains by 1%, it would be literally just getting to 13 shillings, and you're already in the money. So that would be like 10%. If it goes to, let's say, 13.5, 14, you're already up over 100%. So that basically doubles your money instantly.
Okay.
So also the downside is the same. So the higher the leverage you take, if you're wrong, you also lose the same amount of money. Yeah.
Okay.
So you'll find that traders are able to capitalize on these opportunities to find just the right moment where if the market goes this way, they know there's a good chance it could make a good number of points. So when we are trading, we focus on these points called pips. So there is an opportunity where, let's say on a given chart, you are like, I'm going to make an entry here. If the market goes down by this number of points, this is my risk. Let's say this is your 20K risk, okay? But then if the market goes up, it can go much higher.
Yes.
And then you target a much higher price. So in that case, that difference is where you get your 50K versus the 20K. So it's not someone who determines it. It's you as a trader who looks for opportunities that are more likely to give you a higher reward if you risk. And if you lose, you take a small loss.
Okay.
Yeah.
But there is no guarantee. I've learned the market, so now I can operate from a place of, I want to do this as a job, but I can live like someone who earns 200K per month because I know how to stake my $1 million.
Well, it's more of an experience kind of approach. Remember what we said, like, if you have the 200K, I would tell you right now, don't invest that money. First of all, learn until you build the skill. So the same thing applies to, let's say, a person who has a job or a business, and let's say you want to go full time in Forex trading. I've seen many people do it. The idea is that until you're like very confident in your experience, you've gone through different market cycles, you've traded for 3-4 years, and now you're consistently profitable. Now it's within reasonable expectation that you can quit your job and now do Forex full time.
Okay.
Yeah. So you can also do sister jobs. Personally, I work as a market analyst. So I'm analyzing the markets every day and trying to bring this information to other traders, but also I use the same information for myself.
Oh, you are analyzing markets?
Yeah.
And then you share this information?
Yeah.
It's like how people wanasemanga selling odds za betting.
No.
Telling people where the money is. See, that's analyzing the market. If you put your money here, you will win.
Yeah. So for us, it's more like if you're trading without information, you're trading blindly. So for me, my skill and expertise is to look at what's happening around the world.
Sawa.
Okay?
So that's your area.
Yeah.
Sindio?
Yeah. So think about it this way. You woke up this morning in the news, let's say on CNN, they are saying Trump has implemented 25% tariffs on steel, aluminum imports. He has decided to sanction Canada. There's tariffs on Mexico, tariffs on China. But then you're looking at the platform, you're looking at currencies, you are seeing crazy movements, but you don't know what's going on. So my job is to tell you that this information is expected to affect this particular asset class this way. So when I'm looking at assets, for instance, this morning we were looking at Trump updating that he had a call with Russia's President Putin, and they are pushing ways to try and resolve and end the war between Russia and Ukraine. So clearly, before that, when the war had started 2 years ago, what we saw was the euro weakening as a result of those news and gold moving higher. And now we are looking at the potential end of this war, which means that there will be more stability in the Eurozone, their currency might strengthen, and we could be seeing, let's say, gold resuming its long-term trend. But for all this period, for 2 straight years, gold has been trading at a premium, meaning that out of investors who, let's say, wanted to have some form of safety just in case this war blows up in Europe, they had bought a lot of gold. So gold had a premium on its price.
Okay.
So now Trump announcing that they are resolving these and they are close to like getting Ukraine and Russia out of the war, that
the demand for gold?
Yeah, just removes the premium on gold.
Okay.
And the overall reaction, we had gold prices falling today.
Okay.
So my job is now to take all that information and put it to our clients, that is FX Pesa clients, so they understand how to react to this information.
Okay.
So you see, it's value. I'm not telling you this is bet on Manchester United. No, it's more like I'm giving you data, structured data that is reasonably, that is reasonably impacting the asset you are trading.
Okay.
Yeah.
Sawa. Ninapenda hiyo market ya saa 4 mpaka 6.
Yeah.
Naget?
Yeah.
It's better than Marikiti.
Yeah.
So now, if I have money and I know you, then I call you nikwambie, Rufas, unipatie mwa Kenya ya London market, niko na kapesa kananiwasha hapa. I want to put, based on what you've researched on the market, I don't mind losing 20K, but I'll take the 50K. But using your like, see uko na account yako?
Yes.
But I have the money. You have your money to trade.
Yes.
Can I use research yako ya market ya leo niwekelee kitu? Let's say I'm your friend. I don't want to, like, in terms of storing value. This is just a scenario. Nataka 50K ya kutesa. Can I use your knowledge to trade that day? Nipate pesa ya kutesa rather than nikwambie nisaidie na 50K.
No, you cannot.
Why?
The main reason is basically we operate from a regulated environment and we are not allowed to offer investment advice.
Rufas. Nikikukol nikwambie nipe 50K for no reason. But then badala ya hiyo you probably have
trade nikwambie wekelea hapa.
Nipatie tu trade niwekelea hapa. Nipate 50K nikule pole pole. Like, what are friends for?
So the approach we take is educational. Like, if you have never traded before, like, I would rather you go through the whole course so that ukipata hiyo 50K si kesho nikiamka utanipigia tena.
No, but that's a new level of stinginess. What are you losing by telling me, by not telling me, shika hii weke, niambie tu, like, niambie mwa Kenya wekelea London leo. You tu, like, you just tell me, unionyeshe tu where account is na unionyeshe wewe wekelea leo.
Now imagine, I've had interactions with I would say a couple of thousands of traders over the last 6 years. Now imagine if all of them were to depend on me to tell them, nunua hapa, uza pale.
None of them has ever thought like this.
They always reach out to me.
Oh, it's not a unique idea.
So what we do, at FX Pesa, we have these daily sessions. We do them on YouTube, they are live, they are public. So on these sessions, we'll talk about what's moving the markets today. So we'll do an analysis together. We'll look at the dollar, we'll look at the pound, the yen, we'll look at the US equity indices, the SP 500, the Dow Jones, the Nasdaq. We look at gold, oil prices, and including the politics, geopolitics, all of them in a 30-minute session. So we'll try to understand what are the key factors that are moving the markets today. These are the assets to focus on today. These are the likely movements. And of course, if you have been trading and you have gone through the courses, you understand like what these things, how these things impact the markets, then you'll be well informed. You won't have to tell me, Rufas, tuna trade wapi? You already know.
And how predictable has been
how predictable or how fruitful
Yeah.
have your prediction in the past been? Like, let's say, like if you tell people these are the the market movers of today,
Yeah.
and people stake their money,
Yeah.
what are the percentage that they are going to make money there?
I don't
to
know.
see the quality of your Mwakenya.
Is it possible to push this to my listeners? Because I have a lot of listeners who follow the market snapshots on YouTube, and listeners we have on Telegram,
Okay.
and listeners we have on X, and of course we have a podcast called Bullish Banter. So a majority of these guys follow these classes every day. So I do live analysis. So if I spoke about their outcome, I would be lying.
If you spoke about their outcome,
Yeah.
you would be lying.
Yeah. So
Mimi natafuta guarantee.
I would rather the people who have been attending say that I've been following these sessions,
Yes.
and this is my outcome.
Watupatie feedback. By the way, wase, please, if you're watching this na umekuwa ukifuata Mwakenya za Rufas, tell us the success rate hapa kwa comment section. We are looking for guarantees. Tunataka kuona
Yes.
how legit it is.
Yeah.
Because I think mimi nikiangalia from a money mind perspective, I think you would make money that way. Like kuambia watu like log in live na wapatia predict nini London. Like I can wake up saa 5 na 6 jioni there are goats going to be digested. I think that's a
The other thing is that Kenyans don't lie. Like if let's say you're doing analysis on a daily, and every time they are like, oh, he said do this, they buy. He said sell this, they sell. If they are losing money, they will come for you.
Hiyo naye najua
Kenyans don't like being lied to.
So your platform, the feedback, okay, umesema you don't want to blow your own trumpet, but wale wasi follow hizo markets, but the level of experience also matters.
It matters a lot.
What is market psychology?
Market psychology is trying to understand how markets behave based on different economic environments, based on different, I would say, conditions in the markets. For instance, the markets are always on a pendulum of 2 cycles. Risk on, risk off.
Risk on, risk off.
Yeah.
Risk on, you will lose money.
No, risk on is when a majority of the participants in the market are willing to take extra risks.
It is that predictable.
No, I'm saying
risk on is when a majority.
Yeah. Think of it as a market is like a really huge group of participants in the market, right? So these people have different thoughts, but sometimes those thoughts can be aligned in one direction.
Okay.
For instance, when last year, when the US equities were moving higher, it just accelerating, moving up 5, 10, 20%, you would say that the market psychology was bullish. Like everyone is very positive about the stock market because it's just going up. And the market is going up because of the net between buy and sell orders, which means that there's more demand than supply, price is moving up. So in that case, the market is bullish. Sometimes the markets can be bearish, okay? But in between the long-term trends, there is short-term trends. And these short-term trends that may happen, let's say per day, where we can say today the market sentiment is risk on or risk off.
Okay,
so
understood.
Risk on sentiment means that a majority of the players or the net is basically willing to take more risks. So there are periods when the market is willing to take more risks and the periods when the market is not willing to take risks.
Okay.
So in risk on periods, you tend to see stronger trends in the markets. In risk off periods, you see stronger trends, but in safe haven assets. So for instance, in the Kenyan stock market, during election periods, especially when we are waiting for election outcome, it's usually risk off. In that case, nobody is buying out of shares. People are just holding their positions, waiting to see if there will be a peaceful transition, and then they put the money back into the market. So it so happens so many times in the global markets that there are those periods when people pull back their funds. and they are like, wacha kwanza hii tuweke hapa kwa gold, and then tukimalizana na hii tutairudisha kwa market. So when those periods happen, when there's war, when there's a change in administration's policies, in that case, you'll find that more people will be buying these risky assets. These safe haven assets. So for instance, if you look at the markets today, gold is breaking into new all-time highs. So the main reason is to find out of investors going for gold is because the riskier assets, which tend to have a higher return and a higher risk. So high risk, high return, they will tend to stay away from them, waiting for something to happen, then they come back. So case in point, we saw Trump implementing sanctions on Mexico, on Canada, on Colombia. He promised to sanction. South Africa hasn't happened yet. He's also looking at Japan, the Eurozone, UK, and all these other countries. So if you are just innocently invested in a stock and you have just analyzed the company itself, it has the potential of giving good returns, it has a good financial position, but then you don't know what Trump will do about that country. What if the company sells a majority of its products in the US, then they are slapped with 25% tariffs? So in such an environment, when there's uncertainty in the markets, you'll find that a lot of investors will go risk off. So those are two scenarios I gave you about market psychology. So there's other scenarios of market psychology, such as when there are periods when the markets are overextended.
Okay.
Investors tend to overreact to bad news as well as good news. So when there was an announcement of Safaricom expanding to Ethiopia, there was an overreaction. Everyone is buying Safaricom. But then they didn't know it would be a lengthy capital expenditure process before Safaricom eventually started recouping profits from Ethiopia. Then bad news. I don't know what bad news we had that had an impact. Sometimes, last year, but one, that was 2023, Kenya was announced as the worst performing, as having the worst performing stock market exchange in the world. So there was an overreaction, all this kind of panic. Why am I still holding my money here when there are other stock markets that are doing better out there? So during that period, there was an overreaction. People sold stocks like nonsense. Prices went really low, okay? So that kind of market reaction, investors are able to study it, that market psychology, and take advantage of it. So if you look at the Kibungas and the guys who bought the dip, they really bought those stocks at really low prices. And then by the end of last year, we were looking at people saying, I'm up 100%, 200% on my stock holding on a majority of these NSE stocks. Does that mean that the Nairobi Securities Exchange companies doubled in valuation in terms of their products, offer, or services? No, it didn't happen. It was just an overreaction of people panicking and then people buying the dip and prices going up.
Could this be manipulated? Like people who know this game, they can manipulate good news or bad news to benefit from it.
Well, look at the global markets. There's always what? We call them investment letters released by top investment banks. There's also what we call ratings. A company will be changing the ratings of a particular other company. So Goldman Sachs may wake up tomorrow and decide we are changing our targets for Tesla. So if we were targeting 200, now we are targeting 250 by the end of the year. So they will do that, and their top investment banker will publish that on a reputable institution like Bloomberg, CNN, and many other platforms. And then other news companies will look at those, they will copy the information, spread in other news websites. And all of a sudden, you see the stock price moving up. So the game is also present in the global markets.
Manipulated?
Yeah. Well, manipulation of information.
Someone told us on this show that you cannot succeed without insider information, for lack of a better word.
Well, you can succeed without insider information.
But that will be guesswork.
No, whenever something happens in the markets, let's say there is insider information. I'll give you an example. Let's say your brother works at KCB, and he has insider information about what they just did on their audit, and they know how it's going to impact the markets. Let's say they failed an audit and now they might be facing a class action suit, and it's just a hypothetical, right? And now he knows that KCB shares are going to drop like nonsense tomorrow. So he comes and tells you, and you go and enter short selling positions. But then he was not alone. There was another person in the audit room, and they also do the same thing. So for us traders, we will see it in the charts that something is boiling in these charts.
Yes.
And we will see some form of footprint, because the more you sell, the more it impacts prices. And investors have learned to understand those movements. And once we see certain kind of movements, you are like, this is not normal. And then you can even track it in volumes. Like a share, let's say normally trades what? A volume of 1 to 2 million per day. And now they are moving 10 million in a day. You will know something is wrong here.
Okay.
So there are people who track this, and they can easily tell. So as much as people try that, which is illegal, they are easily captured. Like it's so easy to tell.
Sawa.
Yeah.
You've refused with your Mokenya ati to tell me how to trade.
Yeah.
What's the deal when you're trading for someone?
So I don't trade for someone.
But there are people who trade.
Yes.
Like there are people who, there are Forex traders who are technically brokers.
Yeah. I would say managers. Because it's
but you can
managing.
You can be a manager, you know?
Yeah, but you need to get a license.
You need to get a license.
Yeah.
So if you are a manager, I can tell you, Rufas, niko na 10 million hapa, sunieke London ni kule nyama jioni.
Yes. If you look at guys like SIB, that's what they are doing. They are fund managers, so they collect money from investors.
Okay.
Then they invest it in various markets.
Okay.
Yeah. So the idea of collecting money from someone and then you trade for them is extremely risky, because markets can be volatile and you cannot guarantee that you're going to make profits for someone.
Okay.
And in case you do it, how are you going to guarantee that there is a safety of clients' funds?
Okay. So
for instance,
that's where the regulation comes in.
Yeah.
Okay.
For instance, if you look at all Forex brokers in Kenya, they are regulated by the CMA. They are all required to segregate clients' funds. So the broker's money versus the client funds are in separate accounts. And of course, the CMA constantly monitors the health of the client's money, so that if you guys decide to mess up, you will not be touching clients' money. Okay. Yeah.
Sawa. And with the growing imagination of how lucrative Forex trading is, there is a conversation here that there are bots.
Yeah.
There are AI to machines that you just give it instructions and it trades for you, and then your 200,000 can make you 100K by evening. What's the truth about this?
Well, I would say that bots are not something new in the markets. They have been there for the last 20 plus years in Forex trading. So when you talk about bots, back in the day, it used to be what we call expert advisors. So if you follow certain rules in the markets, let's say you wait for the price to hit a certain level or form of a certain pattern, so you would code a program that would observe the markets on your behalf, and if such a pattern appears, it would execute a trade.
Oh, like snitches now.
Yeah. Okay. And then when a certain condition is met, maybe it's up 100 pips, then the bot crosses the trade for you. If it's down, it crosses the trade, and so on. So those expert advisors would exist. People would back test them and see whether they are working. Most of them were really bad. They would literally blow accounts.
Most.
Yeah.
Okay.
So now people have improved. Now they have added the concept of AI, where it can also study social media trends, what ticker is moving, what cryptocurrency is moving, what commodity is moving, and then what are people talking about, and then combine that in its analysis, and then execute trades for you in a more advanced environment. So yes, those bots are there, but until you have a track record of that bot, you will not be able to identify a competitive one versus a non-competitive one. So at the same time, nobody is going to build all that and then sell the boat for $50 to you. In most cases, if a boat is not very competitive, then it's very cheap. Think about it this way. If you had a boat that is consistently making 5% per month, every month consistently for a year, would you be selling it to your friend or your cousin or some guy on Twitter, or would you be selling it to a big bank?
Why would I sell it in the first place? You bring that money, I give you 2.5%.
Yeah, but even if you sell it to a bank, you'll still have a copy for yourself.
But see, they can run you out of the market. Has someone ever created something that can guarantee you, like a bot that can guarantee you at your 5% per month?
Well, Zico, there is various, we call them quant platforms that have been in existence for years, and they have made some serious returns. I will show you a company that made 60% returns over the past 30 years. And
consistently.
Consistently.
Then see, that's someone who has beaten the market.
Yes, they have beaten the market proper.
But it's gatekept. It's not.
No, it's a hedge fund. So you basically invest in them, and then they invest in the markets.
Oh, so the bot is theirs. They are not selling the bot.
They are not selling.
Where later Pesa will give you 60%.
Yeah. So if you are in Kenya and someone is selling your boat for 10K, 100K, they are most likely scamming you. They are most likely scamming you. Yeah.
So in short, hata hii Forex yenye people have displaced peace on Instagram using, it's not easy money. It's not
easy money. If there's someone displaying like, let's say, opulence, or they're just living their life the way they want, they have always dreamt of having an Audi, a BMW, traveling, airplanes, all the stuff they use. If they are trading and living their life, they probably worked really hard to get that money, to get the skill, to get the discipline, to get that money. And then all of a sudden they are selling you signals, they are selling you a boat. I doubt that they are trying to help you.
Uongo.
They are not trying to help you.
How long does a course take ya kufanya Forex trading for the people who are interested?
Well, within 3 months, you should know your way around everything you need to know about Forex. That's if you're putting a lot of hours per day.
A lot of hours per day?
Yeah, it's not like you're
so you're part-time classes, like evening classes?
Yeah, but there is the learning, and then there's the practicing. So it's not something that, I told you it's a contact sport. So you just don't go through the course, if it's in a book, and then you're done, let's start trading. No.
Okay.
It's more of, I learn about this concept, I open my MetaTrader 5 trading application, I try to experiment with this concept, maybe on a demo account. I see how it works, I learn about it today. Tomorrow, I learn about another concept.
Okay.
So I keep on learning and practicing. So you're doubling down between learning and practicing.
Okay.
Because at the end of the day, you're not looking to have an education, you're looking to have a skill.
Okay.
So it's more like, you see, like how you learn how to drive. So you learn about all the road signs, the rules, but the end goal is not about learning all of that. It's learning how to drive and drive safely.
Okay.
Yeah.
Can you live your whole life, assuming you get to live to 100? How many years do you want God to give you? 200?
100.
100.
I don't want to go past that.
Sawa. God gives you 100. Can you live all your life as a trader, or you have an exit strategy at some point?
Well, I think once a trader, always a trader. I don't see myself going out of trading.
You can trade for life?
Yeah. The markets are not going anywhere. People are always going to speculate. And I don't see any other thing.
Na hakuna cha retirement that you have made enough money, let me now have fun. Staki hata kuona hizo boss, staki kuona hata sijui hizo waves. Well, I don't think I will be a trader because I don't like hizo mavitu.
I think retirement is a bit overrated because I've seen people go into depression, especially people close to me, mainly because of the shocks that they meet immediately after they retire. It's a complete change of lifestyle and everything you are used to. So for me, I would rather have a smooth transition.
Okay.
Yeah. Yeah.
Okay. Sawa. Wiki make sure namba ya Rufas iko hapa for those interested in trading. Maybe you have technique. One thing, I'm glad I have won the debate that it's purely based on randomness.
No,
Number one,
no, it is
I have won.
No,
you have agreed with me that ukweli you cannot have a consistent, like you cannot have to make the word guarantee is not used here.
There's no guarantees.
There's no guarantees, you know.
Yeah.
So tumesema politely that it's pegged on randomness. Yes, kuna ka experience kidogo, but randomness is...
Randomness ni kidogo, but the underlying structure is what matters.
Like, you can lose for a month, you can win for a month.
Yes.
The polite word for that is randomness.
Think about, like, let's say you are a farmer, you have cows, and these cows are getting you 20 liters of milk per day.
Yes.
Can you guarantee that every day?
To some extent, yes, unless there's something wrong with the cow.
Of course, the cow can get sick. The markets can be different today. Like, there's no difference.
So tuseme you agree, as in let's to stick to wording hapa. Tukisema randomness ni kumaanisha hauwezi sema you always make 10% per month. You always make you can't say mimi utengeneza 5% per month guaranteed. You can't say that.
You can't say that.
You may make 10% this month, you may make 2% next month.
Yes.
That's randomness.
Well, I'm saying that the outcome of your trading does not, like, there's causation, and then there's, what do you call it? Like, it's not randomness that causes your outcomes.
No, it's not, but the same thing, nasema, however good you are, you may win, you may lose.
Yes, there is some aspect of luck in the markets.
Exactly.
Yes.
Now, as in, we cannot talk about
that drives markets.
It's not all that drives market, but it is a very key element. And number one, also, we can also not use the word certainty authoritatively.
Yes. And
it is for risk takers.
This is coming from a person who has been in the markets for 10 plus years.
Yes.
I'm telling you, you need some aspect of luck in the markets.
Yes.
But then you cannot depend on luck to be successful in the markets. There is a certain approach that you need to have in order to even out the odds.
I agree.
Yeah.
100%.
Yeah.
But even with this approach, easy.
Yeah.
Even with all the expertise, studying and everything, still, you cannot have a placement ya kusema, by the hata nikireduce risk aje, kuna mahali utaumwa kidogo. You will win, but utaumwa kidogo. Well, it's Russian roulette.
Now, think about it this way. If you're following a structured approach in the markets, you have an edge, you have a trading plan, you have a risk management plan.
Yes.
You're going to make money.
You are going to make money.
Yes.
Yes.
Especially if you are disciplined. So this money that you're going to make will be even. Will be uneven. So you might make 10%, you make 2%, 15%, 20%. And then at the end of the year, you might have an average that's better than the SP500.
An average that is better at the end.
Yeah.
So I know you will agree with this statement.
Yeah.
Ndio tufunge hii debate.
Yeah.
You will agree with this statement.
Yeah.
Forex trading is not passive income.
No, it is not.
Thank you.
Yeah.
Si ndio hiyo?
Yeah.
So on that part I won.
Yeah.
So now for watu wenye wako na roho na watu wenye wako na spirit, tume make sure you know ama you have how you can reach Rufas. Wale watu wenye wanafuata Mkenya ya Rufas, please tell us in the comment section. Unaweza kula nyama na predictions za London market. Asante Rufas.
Asante.
Thank you for sparing your time.
Yeah.
It's always good vibes hanging out with you.
I really do appreciate.
Asante.
Awesome.